Good morning, everyone. Sorry for all the confusion, but I am a great accountant, good tax planner, but not real good with the computer. And without Michael Sterwich and Raphael available in my office, I'm having a problem. Although I do have 33 people in my office, they're all swamped with work. Anyway, this seminar is really based on, and I was telling Raphael, I just got an email today which listed 6 more changes for the tax preparation for 2021 and going forward. Unfortunately, I printed it and someone grabbed it off the printer. Anyway, so I don't have those 6 new ones, but tax planning in a period of constant change like we're having is just absolutely crazy. Glazer Group has 5 companies: Glazer Financial, the Pension Specialists, the Property and Casualty, and a few other companies. The key to everything is accountants. Unfortunately, we've just hired 3 new accountants and we need 3 more. So it's a real problem when you're having constant change. And then the other thing that happens is we use computer programs to prepare the tax return. But what's happening is the computer companies are not up to date with the changes that have already occurred, let alone thinking any potential other changes. So it's a real issue when you can't enter all the information into the computer to get the tax return completed. We're a very proactive income and estate tax planning company, and our concept is really to do good tax planning, reduce cost, especially income tax, and build more net worth. The other thing is we're very active in the international tax planning market, which is also changing drastically. So there's so many different changes. And fortunately, I have, as I said, 33 people in Glazer Group. And the 33 people out of there, I've got 2 or 3 that are very good with the international law, and I have the rest of the preparers and accountants who do all the preparation. The other issue is, and I want to just say for the few people that are here, I understand we might have 4 or 5 people, but we don't know how many more are on Zoom. But the bottom line is that the accountants are trying to get all the data in. So if you haven't prepared your tax return yet, or don't have all your information into your accountant, you're going to have a real problem because they're going to be no different than we are. It's very difficult if we don't have all the information. And then it's very difficult if the people at the equipment sites don't have all the forms, then that also is going to delay the preparation of your tax return. So there's a lot of issues. The first one is getting your data to your accountant or professional. In our case, as I said, we have a big number of people in our office, and we probably have 5,000 clients now. So getting the information in is a problem. And then, of course, getting the preparation done is a problem. You have to do a lot of different things, like we have to coordinate the tax laws in the foreign countries with the US tax codes. And we do planning based on business plans to utilize the maximum deductions. We're very creative with our concepts, and we're very into asset protection and tax planning. And of course, you have to do that before you buy or sell any property or investment and before your year end. We have clients all over the world. The few that are up there: Mexico, US Virgin Islands, France, United Kingdom, Costa Rica, Turkey, Panama, and on and on and on. We have a considerable amount of foreign countries where we have clients who have bought property in the foreign country. Now, Raphael and I probably did seminars in almost all of the Caribbean, and then I have done one in Austria, one in Italy, one in Israel. So we've done them all over the world, and we customize a strategy to suit the client, the family, and the business. Our high net worth clients have been benefiting from our expertise and experience for, well, it's not 46, it's actually 65 years. I started in accounting personally when I was 17. I will soon be 82. But fortunately for me, my son joined the company 35 years ago. And most of my employees have been with me for a minimum of 15, 16 years. So we have a considerable continuation of staff. So once you become a client, that person is still probably doing the tax return. And that's very important. And what we're finding is a lot of the tax preparers don't have the staff, and SureSec don't have the professionalism that we have. We have probably 4 or 5 tax people that can work with the IRS. We have 3, 4, 5 CPAs, masters in tax, and so we have a considerable amount of knowledgeable people. Myself, I feel like I'm a tax and forensic tax accountant. And as I said, I speak at numerous corporate and organization meetings all over the world. So, and I've written and published many articles and have publications. And as I say that, I just want to tell you that if you need information, you need to join our websites or look on our websites so that we can get your email and send you the articles that we've already published. Now, I've done some myself, but we also get many articles that we get prepared for us. And so if you need information, you need to be looking. If you're on our list, our computer system run by Michael Stairwood sends those out almost daily as items come up. The times change, needs change. We have to be flexible and we have to adapt. I feel like we lead the field to keep up to date on changes as well as likely changes on the way. And that's why I was so upset that I lost that email, because it had 6 items on there that I probably know about, but it was really very specific that they were preparing to add those to the tax law. And of course, without being too political, the problem is we have a president that is coming up with tax changes in his own way, instead of getting Congress to enact the bill. First, he decides what to do, then he sends it to Congress to get approved. Now, of course, our previous administration sort of did the same thing, but it's a little bit hectic now, much more hectic. And many of the problems I see my clients experience are really a direct result of inadequate planning, which keeps them in a reaction mode rather than in a planning and preparation situation. It's our responsibility as citizens to pay the taxes we owe, but it's also that we got to understand that we want to only pay what we have to pay. You should not pay a penny more. So I very constantly am looking for ways to create good tax service. Takes a lot of effort, We also think about health and catastrophic planning, because many people are ignorant of the impact of people getting sick or having an accident. And especially if you're out of the country, it's a bigger problem. And then estate planning. Now, we're sitting in a situation where we have like $11 million exemption for estate planning. Well, that was a real boom for the farmers and ranchers. We owned a ranch, and of course, that saved the family a considerable amount of estate tax, an $11 million exemption. But I know right now that we're going to get that taken away from us. Retirement planning also, I think that's some of the items that were on that email that I had. The retirement planning is going to change. They're talking about taxing us for income that we haven't earned. Well, that we earned, but we haven't cashed it in. So you might have a retirement plan that's worth $1 million, but the market value, if you took it out in cash, might only be 500, but they're going to tax you on the $1 million. And the real question is, are we pre-planning? It's not necessary to know where we've been, but where are we going? We don't want to prepay government, and we want to know when the return is filed where we're at, the tax that we owe. Now, in our case, we try to get that number of tax that we owe prior to the due date of the tax return. Now, most people would say, well, how do you do that? Well, for most of us, you got to have good bookkeeping. So if you don't have good bookkeeping, either internally or externally, then you have a problem. Do we know before the year ends so that we can plan? That's the real big issue. Tax savings at any bracket is as important as your return on investment. We're dedicated to financial education of professionals. And when I say professionals, I don't want to insult the people who run a garage or whatever, but that's everybody, professional. We think of developing cost reduction strategy. And we really think about cash flow management, building net worth, and asset protection. Our commitment is to provide sound financial information, help you identify goals, and offer complimentary consultation. And that's another big thing that we do as financial consultants, is we do not charge for just telephone calls or whatever. We don't start a clock running and send out a bill as soon as we answer a question. Our goal is to answer the question and try to get you as close as we can to what tax you owe, and try to give you the best advice as far as your investments, including your own business. The thing about the IRS is this was the schedule, and it was interesting because President Obama, who President Biden worked for, they were talking yesterday about the insurance, I forgot what they even called it, but the insurance, the health insurance situation. And you would say, well, gee, that was a great thing. And I think it has helped add a lot of people to the health insurance role, because actually even President Trump improved on that. And I don't know if Biden has done anything, but there are more people insured than there were. So that's an important factor. But if you look up at the upper center, there's 3 letters up there, IRS. And I assume all of you know what that stands for. And even in this medical bill, there was major additions to the tax bill. You have to pay an additional 3.8% if you make over 250,000. And so the IRS is in on everything they're doing that supposedly is a benefit to us. And the point is, life insurance or other expenses in the amount of $1,000, which are deductible costs costs us $600, but after tax, it costs us $1,600. So when we're thinking about pre-tax deductions versus post-tax expenditures, that's very, very important in your planning. And our biggest cost and hindrance to accumulating net worth is really taxes and, more importantly, penalties. Now, if you think of the various things, you can be a sole proprietor, all income is taxed, deductions are phased out as income rises. There's no asset protection, no estate planning, and no flexible pension planning. And if you look at this screen, you can see if you're a corporation, you start to get some separation between your individual tax and your corporate tax. And that's the key. What expenses can I deduct to reduce my taxes when incorporated? Well, you get more of a help because you get medical insurance, disability insurance, life insurance in a qualified plan. And then all your medical expenses are also deductible in an HSA hospital savings account. If you're incorporated, medical insurance, medical expenses, disability, life insurance are all deductible. If you own your own corporation or an employee, you get even more protection. So this is a little schematic on how it will look. And if you're an employee, you also get some additional estate protection, estate planning, and business planning. And this is where we start an estate plan, because we use what we call family limited partnerships to protect your assets and discount your total estate and income tax. And we reposition your income. So what we try to do is say, okay, if we can put some of your investments in a qualified plan, those tax on that income is going to be protected or not available. Although that's one of the things the government's talking about. If you have $1 million in a retirement plan or 500,000, and half of it hasn't been cashed in yet, they're trying to set it up so they tax you on that income, even though you haven't realized the money. So that is a really big problem. In retirement planning, we got to think about the different types of plans. I'm an expert on defined benefit plans, but my staff has a considerable amount of experience in retirement planning. And this is sort of a schematic on the family limited partnership. So you have a family partnership with you and maybe your wife or your partner, and then you have a corporate general partner, which is also split between your partner and yourself. And then you have individual partnerships for your stocks, your bonds, your real estate, and any foreign funds. Because if you have a foreign corporation or you have a business offshore, you potentially can save 100% of your tax on the foreign earned income credit. So, you don't have to pay tax in two different countries, and that's very important. But if you really go through this, which we would do with you, we could show you that you'd be saving a considerable amount of tax if you have international businesses or investments, and you'd have a lot of protection because someone comes in and sues you, they're not going to be able to get to that family partnership. Passive losses, sub-S entities are being attacked. So those of you who have a sub-S, you can't just say, oh, I'm not going to pay any tax in that corporation because it's a sub-S. You're going to have to pay the tax anyway. They're being attacked because people assume they don't have to take a salary. And if the salary and the salaries they do take are unreasonably low for the principal and the owner. My wife and I have a small corporation. I give her a salary out of that corporation for her functional work. So she pays both Social Security and income tax on that money. But a lot of that money just flows through as income tax, no Social Security. How do we start the planning process? We're very particular about getting monthly financial statements, quarterly salary decisions, annual tax meetings, and try to get all that in, hopefully on a monthly basis. And when we pick up a client, we ask you to send in 3 years tax returns so we can review them and be able to tell you if we see some errors that maybe your previous professionals missed. And you might say, well, he's the best. Well, even the best of us make mistakes. So we think we should review at least 3 years tax returns, because that 3 years is the number of years where we can amend the tax return and get your money back if there's an error, or pay the money in if there is an error. U.S. citizen, resident, green card holders must report and pay U.S. income tax on a worldwide income. But there's a foreign earned income exclusion based on days or a foreign tax credit. So you're not going to pay double tax both in the foreign country and in the United States. Foreign bank accounts, we got to file. Yeah, I mean, it's getting ridiculous. We have some tax returns that are 3, 4, 5 inches thick, because you got to file a foreign bank account form 114, which you got to list all your bank accounts that exceed 10,000, and even if you don't own it, if you have access to that bank account, you got to report it. And if you don't report it, the fines, the penalties are not 10,000 like I have there. It's now up to 25,000. So you got to have people who know what to do with foreign income and foreign bank accounts and whatever. And it goes on and on. We got to file other Form 8938. We have to file a form for foreign corporations, subpart F income, interest, dividends, capital gains, possibly rental income, and foreign trusts. We have to file 3528s. I mean, it goes on and on, the amount of information we have to give the IRS. Other reporting forms are for foreign partnerships, foreign disregarded entities, which are sub-S corporations, LLCs, and passive foreign investment companies. It's unbelievable the amount of paperwork there is, and the IRS had come out with a system where we were able to file a delinquent tax return as long as it was a reasonable cause where we hadn't filed, and therefore we got them out of penalties. And I think that the number is like $50 billion of people who didn't report foreign income. We were very good at that, and we had all of our people who were delinquent, we got them approved. They were audited by the IRS, and every single one, we didn't have one that wasn't approved as far as not having a penalty. The thing about our firm is you can take care of all your financial needs with one company. Now, that doesn't mean you have to use us for everything, but we're available year round. We use an objective analysis and give advice, and we do comprehensive planning. We just had one of my old clients in, and they have a ranch, they have cattle, they have 2 restaurants, they have whatever, they have all kinds of whatever. And so we're constantly advising them what to do. That doesn't mean that we have to take care of everything, and some of it has to be taken care of by attorneys. So what can I say? And the many changes coming in 2022 is really unbelievable. The new year brings many tax changes, and most of the stimulus related easings have expired. So the things that came out when pandemic first hit are now have gone away. So all this is a problem. And many changes are coming in 2022. Higher earned income tax credit for workers without children has expired. So has the larger child care and dependent care credit. And the 2021 easing for charitable donation of cash are no more. The income tax brackets for individuals are wider for 2022, which means people are going to have to pay more taxes. And the standard deductions for 2022 has increased. So that's a positive. The problem is what I'm finding is, even myself, unless you have a mortgage, unless you have a lot of donations and whatever, that they force you into a standard deduction. I believe it's now 28,000. The standard deduction used to be minimal. And the tax rates on long-term capital gains and qualified dividends do not change, but the income thresholds to qualify changed. The adoption credit is taken on up to for 15,000 of qualified expenses. The Social Security annual wage base is 147,000, a $4,200 hike. Some COVID-19 related employer tax credits have expired, and I know we're going to have a lot of people coming in where that hasn't been computed properly. And many key dollar limits on retirement plans and IRAs are higher, which is a good. And the income ceilings on Roth IRA pay-ins goes up. Deductions phase out for traditional IRAs. Income caps are higher for tax-free EE bonds. And U.S. workers working abroad have a larger income exclusion. I think it's 108,000 now. And it's been going up pretty steadily. And that's a big deal if you have a foreign corporation or a foreign business. Contributions to dependent care, FSAs by working parents fall sharply. And the lifetime estate and gift tax exemption, as well as a special, has gone up. The annual cap on deductible contributions to HSA, hospital savings accounts rises. A narrowing of the research and development tax rate begin. A key dollar threshold on the 20% deduction for pass-through income rises, and business can again deduct 100% of expenses. The 2022 standard mileage rate for business driving rises to 58.5 cents a mile. That's got to change. I mean, we're getting ripped on the gasoline charge. My sister was just telling me she was so happy. About 3-4 years ago, she was in a major accident, and she went out and, with the proceeds of what the lawyer got her, she bought an electric car. She said that probably was the best thing she ever did in her whole life, because now all she does is pull into the garage and plug it in. Now, I don't know. I mean, of course, my sister is 10 years older than me, so I understand her thought. But from my standpoint, I don't know if I want to spend $50,000, $60,000, $70,000 for an electric car to save me whatever on my gas. There's more reporting for U.S. partnerships with foreign partners or activities, as well as for S corporations within our national tax. And then the other thing that we do that I don't know many accountants do, we really start thinking about what we're going to do for the year end. Because if you have kids in college or whatever, you might want to put them on your payroll. You might want to get, if you're going to, might want to get divorced before December 31st, and no different, might want to get married on or before December 31st. You may want to stay single to increase mortgage deductions, make use of the 0% tax, deduct health insurance premiums with the Section 105 plan, employ your child, employ your spouse, rent from your spouse. There's so many different things we can do. Fringe benefits, deduct vehicle expenses. And that's what we're finding. We're finding a lot of people who run small businesses are not looking at their vehicle expenses. And if they do, they make a mistake by not really detailing what they're deducting. You got to have good good records if you're going to deduct vehicle expenses. And then, of course, you have domestic travel expenses. You deduct foreign travel expenses and you deduct cell phone expenses. Fees for tax planning and advisory service average as much as 5 times those for tax preparation. Actual average annual fee for tax advisory service was $23.51 versus the industry average for income tax preparation of $4.59. Well, I really think that that's not correct. I think that tax planning in our firm runs somewhere between 500 and maybe 1,000. And preparation goes anywhere. We have individual tax returns for as low as $300. But, I think there's good reason to do the planning. The planning really helps in your overall lifestyle. Almost 3/4 of tax firms offer planning service, but less than 2/3 get paid for them. And that's probably true even for our firm. There's so much planning we do just when people call and say, hey, what about if we bought this, or what if we did this, whatever, and we'll answer the question and maybe never bill them for it. We don't have a clock where we're giving someone a bill for an hour's time. And 1/3 of the preparers don't even offer tax advisory services. Maybe they're considering it, but they don't. We see a widening gap in the profession between firms who lead with tax preparation and traditional compliance services and those that lead with proactive tax planning and advisory services. Firms that communicate the estimated tax savings from appropriate strategy are better able to help their clients reach their short and long-term financial goals, and that is for sure. And the key is, do we have the proper structure to protect assets, to reduce income tax, to reduce estate tax, and to educate our children and to do marriage planning? Our commitment is to provide sound financial information, help you identify goals, and offer complimentary consultation. And Michael Sterwich runs our emailing operation, and we're sending out articles to our entire email list almost every other day. So we're constantly putting together articles that we feel are important. And I believe Michael has a list of those articles. So we might, if you need it, you might ask us to send you a list of those articles. And if you see something that you want to read, we can send it out to you. I want to create a relaxed, caring atmosphere. Very successful, well-known celebrity once said he could find something, at least one thing, to be interested in every person he met. John Travolta believed that there's one reason for success. I believe there's one reason for my success as well. I focus on the person before the need. I want to know your needs and wants, goals, and desires. Ask who and what do I know that might help you as a client meet your needs and wants, goals, and desires. I connect, encourage, and know that ultimately it's up to you to take action. I maintain a contact constantly with all my clients. And these are my contact information, but my recommendation is that you email us is the best thing to do, or you can call us at our personal numbers. The office number is 972-385-0007, but I would recommend that you either call Raphael at 214-534-0781 or my cell phone 469-358-2818. And I can only say my phone is on 24/7. And usually if I'm up, and usually that's before 9 o'clock in the evening, but I'm up at 4:30, 5 o'clock in the morning. So I'm available almost 20 hours a day. So my recommendation is to call one of us and we'll get you whatever information and answer any of your questions. Our lifestyle planning includes a free 3-year tax review. So we want to see 2 to 3 years of tax returns, personal, corporate, and partnerships. last quarter investment statements, mutual funds, money management, a balance sheet, wills, trusts, pension, census of employees, and whatever other information you think you might need. What we found is, interestingly, you might say, well, I have an attorney, but interestingly, we like to take a look. We have one client, we probably changed his will now probably 5, 6 times. His life is very hectic. So, and this is our information informant, and it asks for the pertinent stuff, as you can tell, name, email, phone, mailing address, and then, of course, areas of interest, anything that you feel is important to you. I develop a lifestyle plan. I want to make the move offshore less complex, and do it at a reasonable cost. We have us review previous year's tax return and find out what might have been missed. Find out the tips and regulations for expatriate income tax filing after living abroad. Avoid paying U.S. income tax on foreign earned income, as well as all worldwide source of income. Avoid penalties and criminal offenses, and often unknown items unknown to expatriates. As I said, foreign bank accounts, and all the other forms. There's a ton of information the IRS wants you to tell them. And again, I want to thank you for being here. This is our general information, and you can sure as heck look at our website, glazerfinancial.com, or expattaxexpert.net. So look us up. We also have had a radio program, Tax Tips with Maury Glazer, and that's on YouTube. And also there are many seminars and whatever on the 2 websites. So I appreciate it, and I appreciate any calls. Appreciate you coming, and look forward to talking to you.
Awesome. Thank you, Maura. We appreciate you taking the time out to go through this valuable information. Anyone that's still on the Zoom call, you'll get an email with a copy of the PowerPoint. And if you do have any questions, please don't hesitate to reach out to us. Thank you for your time. Have a wonderful day.